Welcome to a new video. In this video I want to look at liquidity and just explain to you how I understand liquidity and where liquidity is, and this might help you to identify the manipulation and also help you to identify why we look at certain areas as liquidity and why we expect price to manipulate into that area before a reversal or a continuation in the true direction of the trend. So there might be different angles and different views on liquidity, but this is basically just how I understand it, and I'm just going to share with you how I understand it, and I hope it will make sense to you and that you will learn something from it. So for this example, we're just going to look at sell side liquidity, meaning where we are in a bearish direction and we're going to trade bearish, not bullish. So we will be looking for sells. We will be looking for sells, not necessarily all the retail traders, but specifically us. So there's two types of liquidity in this situation. We have stop losses and then buy stops. So basically the first and the easiest one to understand is stop losses. So we have a potential double top. We think that price is rejecting this level and we enter a sell over there, and we have our stop losses just above the highs to the left, and we think that price is going to stop at least over there before. So that is our safe zone. So we want our stop loss in that area above the wicks that might be to the left, and we take a short from this double top because we think this is going to be a double top. We might see some confirmation like a bullish engulfing candle, whatever it may be, and we take a sell. So in this instance we have the stop losses. So I'm just going to say stop losses in this area. So that is what we anticipate. Well, not we, but that is what traders anticipate. In this case, retail traders and other traders, they anticipate potentially a breakout and price to continue to the upside. So they might have their buy stops in here. So limit order, not a limit order, a buy stop order. And they will have, I'm just going to say BS, the buy stops in that zone. So in both of these examples, we have orders in these zones. A stop loss is also an order. It's an order to buy back basically what you've sold over here. So it's just at a higher price. So if you sell at this level and your take profit is, for instance, over here, this level, this take profit is actually a buy order, because if you sold here, you buy it back. Now this stop loss is actually just a buy order. So we have a stop loss in here. The people going up, taking longs, they are buying here as well. So we have a buy order here as well. And we have a sell order below, which is our stop loss. Because if we buy here, we want to sell over here. But if your price goes all the way down, we want to sell quicker so that price so we don't blow our account. So that is a sell order over here. So I'm just going to write that out so you understand. This is the stop loss is in the form of a buy order, and our entry here is also in the form of a buy order. And then in this case we have the stop loss as well, which is then a sell order. Sell order. Sell order. So what this basically means is that we have orders in this zone. In this zone we have orders. We have buy orders, and in this case as well, buy orders. This buy order is in the form of stop losses, and this buy orders are in the form of entries. But in both cases we have orders. in this case, the trader expects price to respect this area and then trades to the downside. In this instance, the trader is expecting price to continue higher. But what actually happened, and what we actually see happening, is that price tricks, goes down a bit, and then we have a stop hunt or manipulation, and then price continues to the downside. So this whole move, stop hunt, liquidity run, is to grab orders and to trick buy stop orders, breakout traders in going long. Traders that go long, they get triggered in, they are very happy, the orders are triggered, so there's orders, the orders are triggered, and then price reverses, and the sell orders are also stop loss, the sell orders are also triggered in the form of their stop losses. That is a great and big accumulation of liquidity, and that is then when we see price moving in the anticipated direction. So whenever we see a clean high, a clean double top like this, we want to see price reject that area, do a stop hunt, manipulation, and then a continuation to the downside. So if you remember some of the exercises that was for homework, you will remember we have, let's just make this black. You'll remember that we have clean highs on the chart example like this, and then that forms resistance, and then we mark that areas as manipulation. And we have double tops, double tops. Price breaks that area and then continues to the downside, and that is the manipulation as well. So I hope this example shows you and gives you a better understanding of why price manipulates into certain areas. And you'll know by now that we look, or you'll still learn that we look for certain areas where this liquidity may reside. So a great telltale sign of where liquidity is above clean highs, where price pushes up, reverses. There's orders above this area. There's already orders of previous traders that went short over here. So they already have their stop loss just above, structure to the left. So their stop losses is in the zone. New traders thinking this is a double top, their stop losses is also above, as we just explained. So with this manipulation, combining it with time, with session opening, so as you can recall, we look for session opening. So this would be our London session open. London open. That would be our London open or New York open. And with that opening, we expect price to make a run on buy stops, sell stops, stop losses above structure to the left. So we anticipate price to break this level, break into the area of liquidity, and that is then where we take our sells. With the same in this instance, we expect price at market open in and around that time zone. We expect price to be manipulating and pushing into an area of liquidity. Grab the liquidity. Now all the retail traders are stopped out. Either they went in very happy, reverses, and that is when we enter the trade and look to trade in the direction that it's currently going. You'll often notice that when we are in a trend, this is maybe the trend. Price pushes down, we have this liquidity run, we might have an order block in this area, we might have an order block over there, and we have an order block, we have an old high, price manipulates into that area and then returns to the downside, continuing the true direction of the trend. So I hope you understand and you have a better grasp of liquidity. Just to say it again, this is my understanding of it and how I interpret liquidity. And I hope this makes sense to you, and I hope you can apply this to your charts and that it will make things a bit more clearer for you. Thank you, and see you in the next one.